Hey guys, this is Mr. Roxy coming at you live from Lake Worth in Florida. It is November the 26th. It is Friday. It is the day after Thanksgiving in the United States, so everything was closed yesterday. And of course, today is a relatively short day, for, especially on the markets, because we closed at 1 p.m. Eastern Standard Time, New York. Now, by now, you already know what happened. And so it's not my objective to kind of fill you in on what happened in the market today, because by now you probably also know that from a personal point of view, it's a 1 Maserati, 2 Maserati, 3 Maserati day. But what I wanted to do was spend a little bit of time just to see if we can make some logic out of the nonsense that's happening in the marketplace and see what's going on. So first, just the news headlines. The Dow ends more than 900 points lower as the COVID variant sparks market plunge. I've got some Vivaldi playing in the background just to help calm my senses, because most of this is just stupid craziness. But let's just take a look and see what's going on here. US stocks ended sharply lower in a holiday shortened session on Friday, joining a global sell-off sparked by the discovery of a new variant of the coronavirus that causes COVID-19. Really, guys? Is that the news? Let's take a look. So this is in Yahoo Finance, but it's actually from Fortune magazine. Taking no chances, investors abandon travel stocks and seek safe havens as new highly mutated COVID variants spooks market. Stocks tumbled and investors flocked to safe havens. So what I'm going to do here is I'm going to unpack this article for you sort of paragraph by paragraph. It's not a long article, so I'm not going to keep you for too long, but let's take a look at this. Stocks tumbled and investors flocked to safe havens. What exactly is a safe haven, Mr. Roxy? Well, I don't have any idea whatsoever. Maybe the people from Fortune magazine can tell us what a safe haven is, because this makes me assume that all of you, like me, sold all your stocks today and flocked into safe havens, which means you probably sold all your equities and bought some real estate. Maybe you bought a chunk of gold. Maybe you bought an art collection. I have no idea, but it was a sell-off, right? So we all flocked to safe havens on Friday. Why? Fear spread about a new COVID-19 variant from South Africa. Now, as most of you will know by now, I am from South Africa. I was born and raised in South Africa. I have family and friends who live in South Africa, and I had better, at the end of this video, get online quickly to tell them that there is a new COVID-19 variant from South Africa, which is going to cause all of us to sell all our stocks. The strain might be more transmissible and more resistant to vaccines than the previous versions because of its unusually high number of mutations. Well, the current vaccines are not, or have not proven themselves to be effective at preventing the transmission of the existing COVID-19. So by token of that, I probably have less faith in their ability to block transmission of this new scary strain that's causing us to sell all our stocks. Why did this happen, or what happened? What's the background? As of 2 p.m., and this was as of this morning, Hong Kong time, Japan led the market sell-off as the Nikkei 225 plunged 2.5%, its worst loss in 5 months. So how about Japan? Japan is actually a country that's almost literally in permanent lockdown and isolation because it's an isolated island. And as far as I know, Japan is not allowing people to travel freely in and out of Japan. So Japan would probably be arguably at less risk than any other place on earth, other than maybe Australia, which is also a landlocked, isolated island. So Japan leading the market sell-off because of a COVID variant in South Africa is strange, to say the least. But here's where it gets better. Hong Kong's Hang Seng Index recorded sharp losses and dropped nearly 2.67%. Now, I could end the sentence there, but it doesn't end the sentence there because it says it was hit by fears over the new variant and ongoing concerns about China's embattled property sector. So let's just unpack this one, because it's just effectively one sentence. If I were to say Hong Kong's Hang Seng Index recorded sharp losses and dropped 2.67% amid ongoing concerns about China's embattled property sector, you might say, Mr. Oxy, that is more realistic than adding in fears about the new variant. So possibly that could be true, right? Hong Kong's Hang Seng drops because of China's embattled property sector, because there are concerns about that. So let's read on one sentence further. Mainland China fared slightly better than with the Shanghai Composite Index, down just 0.54%. So Hong Kong reported sharp losses because of concerns about China's embattled property sector. But mainland China fared slightly better than with the Shanghai Composite, only down 0.5%. You get where I'm going? This is all garbage. In Europe, the stocks 600 index fell, the CAC, the Germany DAX, etc. They're all down, nothing there. The sell-off is a result of the new COVID variant, confidently stated, alongside news of Chinese regulators asking Didi to delist from US exchanges, then magnified by reduced liquidity due to the US Thanksgiving holiday, says Alvin Tan, the head of Asia FX strategy at RBC Capital Markets. So Alvin Tan, can you please sort of highlight the actual reason for us here? Because you say the sell-off, which means we all sold our stocks, is the result of the new COVID variant, which is repeated for the second time in this article, alongside news of Chinese regulators asking Didi to delist from US exchanges. What about China's embattled property sector? I mean, it's only 2 paragraphs above. Come on, guys, get real. Anyway, like I said, you get where I'm going, right? This is all garbage. The discovery of the new variant sent Asian investors scurrying for the exit door, said Jeff Halley, the senior market analyst of Asia Pacific FX firm Oanda, in a Friday note. I think what they do is they pretty much just search until they can find someone who actually agrees with their narrative, and then they plug that in to provide some kind of a proof or standing in terms of what they're saying. This variant, currently known as B11529, was first discovered in South Africa on November the 11th. Wait a minute, November the 11th is more than 2 weeks ago. How come we only crashed today? I think, realistically, this crash was discussed over Thanksgiving lunch yesterday in the United States. And man, the traders who manipulate the market are really, really good at what they do. Anyway, that's what market makers do, right? They take both sides of the equation, and when the market goes down, they make money. When the market goes up, they make money. But at the end of the day, only the guy that controls that, like in the instance of world wars and global pandemics and things like that, only the people who are betting on both sides of the equation are the ones who are making money. Anyway, it was discovered more than 2 weeks ago in South Africa. The country has detected over 1,000 cases of the new variant. South Africa has a population of 55 million people, and they have over 1,000 cases of this new variant. I wonder how they discovered that, since hardly anybody's getting tested. And this is mostly clustered in the province of Gauteng. Now, Joselito, I know I am saying Gauteng correctly because I actually lived there once upon a time, so at least I know how to get that one right. Gauteng is one of the wealthiest and economically vibrant regions, and this accounts for the majority of new infections in the country. So if 1,000 cases is the majority of new infections in the country, that means all the other provinces have a couple of hundred or just a few of the supposedly new variant. 2 cases of B11529 were discovered in Hong Kong earlier this month because of a traveler who was traveling into the city from South Africa and reportedly transmitted the virus to another quarantining traveler who was staying across the hall. Man, your quarantining is not working too good. You should probably upgrade that just a little, because your quarantine passengers are effectively infecting one another. The new strain has also been detected in Botswana, which is the country next door, and in Israel. Must be a traveler as well. And look, even Belgium has 2 cases of COVID-19 in terms of this new variant. As of mid-Friday, Singapore, Japan, India, Israel, Germany, that all imposed new restrictions on travelers from South Africa, which is nothing new because all those countries had restrictions on travel from South Africa anyway. And by the way, so does South Africa in terms of travel coming into the country. The new travel curves threaten to derail South Africa's tourism season. That is absolutely true, because as we go into winter in North America, South Africa is going into summer. It's traditionally a busy season filled with sporting events, including international sporting events like cricket. And tourism is a significant chunk of South Africa's GDP. So that is not good news. The South African rand, that's the local currency, at one point fell 1.7% to 16 rand against the US dollar, its lowest level in over 12 months. Travel stocks were hard hit by Friday's sell-off. Well, I can imagine that, right? Because travel and COVID do not really go together well in one sentence together. Little is known about the variant other than it has nearly 50 mutations that differentiate it from the original COVID virus discovered in Wuhan, discovered or manufactured in Wuhan, China 2 years ago. So, I don't know too much about this stuff, but I saw a documentary just the other day by a world-renowned immunologist and virologist, and he was saying that there are approximately 12,000 variants or mutations of the coronavirus or COVID-19 virus as we know it. Still, the markets are taking no chances, Hallie said, with haven currencies like the US dollar, Japanese yen, and Swiss franc rallying. US 10-year bond yields have moved sharply lower, 1.5%. Oil has slumped with West Texas Intermediate down 5%. It actually finished down more than 10%. Anyway, enough of this. Let me just quickly refresh this, and then we quickly see what happened at the end of the day. So here's the exchanges. There's the Dow down 900 points at the end of the day's trading, which was at 1 p.m. Eastern time in the United States. Crude oil at $68. Goodness gracious me, who would have seen that one coming? Within about a week or so, maybe 2 weeks from now, we'll be back at around $75 to $80. So we'll have to see what happens there and see how my prediction pans out against what the market making traders prefer for us to be at or do. There's the 10-year Treasury down 10%, and how about this? The safe haven of Bitcoin down almost 8% today. So guys, you know, I don't want to make light of what is obviously a dour situation in terms of the market. The fact of the matter is, unless you actually sold stuff today at a loss, you haven't lost any money at all. It's paper losses, it's unrealized gains or losses until you actually pull the trigger and execute on the actual transaction. So one Maserati, two Maserati, three Maseratis. Let's see what happens on Monday, because you know what a difference a weekend can make. So still bullish, still optimistic, still long and strong. This is Mr. Oxy saying thanks for watching. See you later. Bye.